Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead videos for September 15th, 2019. As you all know, we have our highly anticipated beginning of season offer that starts tomorrow, so you got to tune back in to take advantage of that, which we have been talking about for the last couple weeks. So I'm not going to get into it right here. I'm just going to get into the charts and what we are looking for going into this next week. Now, last week, let's start there. It was a pretty exciting week towards the end of the week. As we discussed on last week's week ahead video, we talked about how the market would be a little quiet going into the ECB meeting, and as you see it was, and then headed into the ECB meeting we got a big move lower, and then we ended up getting a big reversal. That's off of the bottom. Here we go, a big reversal to the highs, and we closed the week near our highs. Now, it was a little confusing because the ECB did start up quantitative easing again. Dollar amount was a little less than expected, but the way that it was done, it confused a lot of the market because it's on a tiering system, and some of the analysis that I read, looked back and said, well, effectively, it's actually a hike for some maturities, and so the euro ended up reversing. And the fact of the matter is, and if you don't understand it fully, and I don't either, and some of the guys that I work with were like, man, this is really confusing. Fact of the matter is, technically the euro closed, whoops, here, let's go back over to the daily chart. The euro closed its week, or the week near its highs. And the fact of the matter is we hit the bottom of this descending wedge technically, and we set up a double bottom. So with that double bottom, it points us above. You can see this dotted trend line that comes through here. It points above that towards like 112 and change. We could theoretically break out here in the in the euro, and it actually, this double bottom here actually points us towards 112.50, towards the upper end of this this descending wedge. So I think technically you have to be a little careful with the euro, especially if you're on the short side. What I'm going to be looking for this week actually is a break above 111.10, and a break above 111.10 should put us up towards 112 and change, which then, as I just explained, is going to be at the upper end of this this descending wedge, which would be dangerous if you're short, because if we break through, we could be looking at the one teens, 113, 114. The most analysts that I read, most bank analysts expect that the euro is going to be capped, in the 113 to 115 range, which is fine, but I think that the market is so short that we could be up there quickly. That's the point I want to make, is if we break through 112, we could trade 200-300 pips higher without much effort, just because the market is probably net short here. And especially with that double bottom, you're just going to get people that readjust. There's a lot of portfolio readjustments following that ECB move, and we tend to see reversals when you see big central bank policy moves like we have seen, and considering that we closed at the week at the highs, I think the risk is that the euro continues to squeeze here. Now, one of the other big moves going into the last week was the cable. The pound really squeezed higher. Let's get over to the daily chart here, and you can see that the pound, we pushed above 120. The big resistance was 123.80, 123.70. We talked about it for the last couple of weeks. We finally broke that. But with the cable, these are my drawings here, since I didn't do the analysis over the weekend. This ignites a double bottom. The double bottom here, if you just look at, this is the double bottom, right? And then the range extension would take us, towards 126 to 127. I mean, 127 level is the 618 retracement of this last major down move. And again, this is more of a positioning issue when you're talking about, like we were talking about the euro, the cable as well. The market is net short pounds or sterling, you could get a real sharp squeeze here that can continue towards 127. Now, one of the other things that happened over the weekend that was really big is if you guys didn't catch the news, is the drone attacks on the Saudi oil assets, I'm already seeing reports right now, like here within the last hour, that Saudi Arabia is trying to get some of these oil refineries back online, but it equates roughly, from what I've read, to about 10% of the oil supply. And so a disruption like that is going to create a gap higher in crude. Now, I guess the problem with that is, and let's find crude oil really quick. The problem with that is, going into the weekend, crude showed a pretty big, reversal, little false breakout up here. You can see as we traded above 58, pulled us back down towards this, support. This is the 618 retracement at 53. And really what I was looking at is a break below 53 would have been, would have put us on track to test the $51 support and then possible breakdown. But obviously with the news over the weekend, what's probably going to happen is we're going to open up close to this resistance, if not higher, maybe even at the $60 level. So technically, if we get above 61, which would be this, with this resistance right here, we could squeeze even higher than that. I think this is a big deal. I think what happened over the weekend is a big deal. But what's going to really drive prices is how fast Saudi can get their oil production back up. And just if you haven't had an opportunity to this weekend, just read about the drone attacks on Saudi Arabia's oil, and you'll hear all about it. Like I said, this news is evolving quickly, and it's being updated quickly. So things may change by the time you've watched this, or you know the FX market really gets a hold once everybody's open going into Monday morning. So the way that could be affected though in FX is you could see a spike up in the Canadian dollar. And what's interesting about the Canadian dollar is the Canadian dollar, and this is going to stink if you guys were long US dollar Canadian going into the weekend. I mean, you look at the dollar Canadian, it closed strong. That means the Canadian dollar was weak. We're probably going to see a gap down in the dollar Canadian. We're probably going to see a gap down back towards 132. Whether it's going to be sustained or not, I think you're just going to have to be watching crude oil. But that happens. You get these gaps because of situations like this over the weekend. So if you're along the dollar Canadian going into the weekend, because it closed really strong and it closed at its highs of the week. Look at the weekly candle. We're gonna probably gap lower, more than likely. Also, you're gonna see the same type of move with the U.S. dollar Norwegian krona. Where's the U.S. dollar Norwegian krona? I think it's down here. There it is. Okay. The U.S. dollar Norwegian krona is going to be probably closing in on this. This is around 892 support. But do you see the formation that would be set up here? Head, shoulder, shoulder. That's a neckline. So now I want you to think about the U.S. dollar Norwegian krona for a minute. Imagine the oil disruptions. It's going to give the Norwegian krona, the krone, the Naki, a lot. If you're a New York trader and you trade it on desk, you might call it the Naki. But anyway, if we break through 890, think about that for a second. The way we have these lines drawn out here, we break through 890, then you have the euro dollar that rallies. Okay, so that means that the euro continues to squeeze higher. That means the dollar, generally speaking, is weaker. We could see a really big move down in the US dollar Norwegian krona. So I think this is a currency pair that you need to keep on your radar going into this next week. All right. I think it is going to be a big deal. Now, I can't remember if Norway, what data is Let me see if I can pull this up really quick. You're just going to have to bear with me for a moment. Let me pull up Norway's information, their data over this next week. You're going to have to give me a second. I'm on a different screen. Sorry, guys. I should have done this earlier, but I wasn't really thinking about it up until now. See, on the 19th, and this is what I thought because I did read it, and that's why it provoked me to say this. On the 19th, which is Thursday, you have the rate decision out of Norway. They're expected to actually lower rates, but how about if they come in a little hawkish, maybe due to the situation in Saudi Arabia? We could actually see a pretty big move lower in the U.S. dollar Norwegian krona. So just some food for thought going into this next week. Couple other things that I guess I should talk about. Speaking of the Canadian dollar, look at the Canadian yen. We've had we had a big reversal from this downtrend line. I actually know a few traders. Let me pull it up over on my screen. Let's go over to the Canadian yen here. So you can see this reversal from a pretty key trend line. I've been monitoring this trend line a lot, and actually some of the traders in our private chat room that use ForexAnalytix, they have traded the Canadian yen short from this 82 yen level. I don't know if they're short right now, but the risk is, if the Canadian dollar does strengthen and we see a continued rally in yields, which I don't know if you've watched the bond market. I'll pull up the 10-year really fast. Where is it? I'm just pulling it up on this screen right here. Here's the 10-year. So you can see the reversal in the 10-year. Okay, so that means we're seeing a rally in yields. So if that continues to happen, we continue to see the sell-off in bonds happen. We would see the Canadian yen possibly break above 82 yen and this big resistance at 82.25. Now also keep in mind, see this red moving average, that's a 200-day moving average as well. So the Canadian yen should also be on your radar depending on what crude oil is doing, because if crude oil continues to sell off and we have a rally in the Canadian, and if you think about that, you're like, wow, well, why would the Canadian dollar strengthen and crude oil be selling off? Because crude oil is selling off because of supply restraints, right? But the Canadian currency might actually strengthen a little bit as a result, because there might be more need for Canadian oil, right? So you might see a breakout of the Canadian yen to the upside. I guess the flip side to that could be, if crude oil is coming down, maybe the Canadian dollar does come down with crude. I tend to believe it's going to be the other way around. But again, we're going to have to watch price action when the market opens, and that's going to be the importance of using ForexAnalytix, because when you're using ForexAnalytix, see all these levels that you see here, these support and resistance levels. These levels, when they get triggered, when you see like a resistance level get triggered, these are manually inputted by myself and other team members with ForexAnalytix. You get notified on your mobile device and on your desktop and email if you choose to do so. And that's good because, being that it's Sunday, it's still, some of you are still enjoying the weekend, depending on where you're at, if you're mobile. When these levels get triggered, you're going to get notified on your mobile device. So that's one of the real benefits of using ForexAnalytix, is making sure that you have the mobile application on your iPhone, on your Samsung Galaxy, on your laptop, on your tablet, on your PC. So this way you're notified no matter what when some of these levels get tripped. And like I said, the dollar Canadian, Norway, the US dollar Norwegian krona, the Canadian yen, crude oil, all of those assets are on ForexAnalytix, so you're going to get notified when they breach these support or resistance levels, because I can make assumptions before the market opens, but really, we have to watch price action as soon as the market opens, this afternoon, and I'm talking to those of us here, for this afternoon. So let's talk about this next week. The events that are happening this next week, and let me pull up really quick. Here's our calendar. So let's go over to this week. Now, this week, if you guys did not know, Thursday is going to be the FOMC, and that is going to be a very big meeting, as the market is expecting. Here we go. I'm just pulling it up here. There's the FOMC. That's a big deal. This weekend, or this next week, excuse me, is we're going to have the FOMC decision, and the market is expecting the Fed to cut rates a quarter basis point, and that's been factored in. It's already been priced in. The question is, are we going to get a hawkish cut or not? And that's gonna be the driver of the euro dollar. At the end of the week, really, is will the euro, if we get to 112, will the euro continue beyond 112? It really depends on, or 112 or 112.20, 112.50, depending on how you're drawing this descending wedge. It's really going to be dependent on the Fed, and if they deliver a hawkish cut, or if it seems like they are going to continue to cut rates going into the end of the year, then that might be the fuel that drives the euro dollar, higher, or reverses from this pivot area around 112. So those are the things that we'll be watching going into next week. Now, there's obviously other things happening next week. On Monday evening, which would be Tuesday morning in Australia, the monetary policy meeting minutes are coming out. Wednesday, we have inflation data, CPI out of the UK. We have inflation data out of Canada. And did I just say Thursdays for FOMC? FOMC is on Wednesday. I'm sorry. I don't know why I was thinking Thursday for whatever reason. It is on Wednesday. Wednesday, we have FOMC. Wednesday afternoon or Thursday morning in New Zealand, we have New Zealand GDP. We also have Australian employment data. So that's going to be Wednesday evening for us here in the United States, and Thursday morning in Australia. We have the BOJ meeting, which we're going to have to watch the BOJ meetings moving forward, because a lot of people think that the BOJ is going to start easing again. So or be a little bit more unconventional. I guess I should say that. Then we have the Bank of England on Thursday, which their hands are really still tied because of Brexit. But but they we'll have to see what the Bank of England says regarding monetary policy on Thursday, which could just add fuel to the fire, as they've been holding off a lot because of Brexit. So we'll see what they have to say, on Thursday. And then Friday we have Canadian retail sales. So, obviously some data coming out this next week. It's going to be a pretty busy week, and I think it's going to be very important to watch price action, especially the Canadian, the krone, the Canadian dollar. Did I just say that? And then crude oil. You're gonna have to watch that as soon as the market opens this afternoon. So, guys and gals, if you found this video helpful for you this next week, make sure you hit the thumbs up button. If you're watching us on YouTube, make sure you select the bell icon on YouTube. This way, you can be notified. You have to do it on mobile too, so you'll be notified when we post new videos, new interviews on our Face webinar. And I just want to say thank you all for listening in. My name is Blake Morrow with ForexAnalytix. Make sure you take advantage of our beginning of the trading season offer starting tomorrow on September 16th. All right, guys and gals, have a great remainder of your Sunday. My name is Blake Morrow. We'll talk to you soon.